what we're seeing in Europe is it's a combination of problems. Obviously, there's
Hmm.
underinvestment, and then you can get away with certain shortcomings if certain risks don't occur. Whereas in this case, it did occur. You had Russia's causing problems, and then also you have record droughts in that region. So you have like a
Hmm.
1-2 punch that's really kind of hitting them in all of the vulnerable parts around their energy grid. And for something like that, there's not a whole lot that Bitcoin can fix.
Hmm.
But what I find interesting about the relationship between Bitcoin and energy is that people when we talk about a resource cost for Bitcoin using energy, the kind of the first assumption is that's all bad. Basically, it's any sort
Yeah.
of energy expenditure is a bad thing, whereas we actually find that because of the unique way that Bitcoin consumes energy, it actually can be used to solve some energy problems. It's still a pretty small scale because the total energy expenditures, several $billion, but it's not like, hundreds of billions of dollars or anything like that, per year. So it's still pretty small, but it can be used to kind of fix certain little issues. And one thing I like to point out, because a lot of people that don't have a background in electricity in various ways don't know, is how non-fungible a lot of our energy is,
Hmm.
right? And so they think that if you produce electricity and you use it to mine Bitcoin, that you could have used it for something else. Where actually in many cases there's no other source of demand in that
It's wasted,
time.
right?
It's
Yeah.
wasted, right? And
Yep.
so we actually waste a profound amount of energy, both on grid and off grid.
Hmm.
And there's really no way around it. These are just frictions of doing business. And so, for example, if you bring oil out of the ground and it's a small isolated well and it comes with some natural gas, the question becomes, what do you do with that natural gas? If it's not enough to have a pipeline built to you, and it's not enough to, kind of collect it all and get it out there, a lot of times they'll just burn it. They'll literally just either vent it into the atmosphere or they're just light energy, perfectly good energy on fire.
Yeah.
And so what Bitcoin can do is Bitcoin, because it's unique in the sense that, you know, even though the network has to be online all the time, any individual miner can shut off and the network
Hmm.
is fine. And so they can just go on and off very quickly. And they don't, unlike a data center, they don't need high bandwidth. So they don't need
Hmm.
high uptime and they don't need high bandwidth. So they have this unique ability to go out to these remote locations and just suck up stranded energy. So it's like you can go to an oil well and say, hey, instead of just burning that natural gas away, how about we just use it to power this electric motor and then mine some Bitcoin with it. So either
Yeah.
way, we're going to use it, but let's actually use it economically. It's actually kind of remarkable how many different areas this applies to, because that's one of the most obvious examples. But there's multiple other ones too. For example, the reason that so much mining happened in China until they
Hmm.
kind of cracked down on it was that they had all this extra hydro capacity, right?
Hmm.
So they built all this hydro that was away from the cities, and not all of that was being used. And so, during the wet season, Bitcoin miners would go over to that region and basically get all this nearly free energy because it's really otherwise just curtailed. It's not actually being used for anything. And so it's super cheap for them to access. And we also see it, use Texas as an example. They have a pretty high allocation of renewable energy
Hmm.
or variable energy, solar and wind. And because they have that closed grid system, that can be pretty challenging. And so one thing that you kind of see occurring is both in Texas and that whole region is the occurrence of negative electricity prices.
Hmm.
Um, which at first sounds like a good thing, but then you realize basically what that's signaling is that energy is being produced and there's no one in that time and place that can use that energy productively. And so you either have to
Hmm.
try to pay someone to take it off your hands, or you just curtail it.
Curtail. Yep.
And so basically having a variable source of electricity consumption actually can help stabilize the grid and can make some of those variable production sources more economic on the margins. It basically affect how that relates to grid stability. Any
Yeah.
grid needs overbuilding, right? Because
Yeah.
if you were supplying exactly as much power as expected to be needed, then turning on the marginal laptop causes brownouts.
Yep.
And even worse, you have to design the grid for like the hottest day of the year, so that when every single household and company has their air conditioning out full blast, that the grid can handle that, even though 360 days out of the year, it doesn't have to do anywhere near that, right? And so that's actually a pretty hard engineering problem to solve because it
Hmm.
costs a lot of money over-engineer the grid for times when it's mostly not even going to be used. And the way that Bitcoin miners can fit into that is that they can do contracts where, because they're the most flexible energy consumer, they can basically negotiate such that they get the lowest possible rate, but then they're the first to have to shut off if for some reason demand is starting to exceed supply, right? So if you have that hottest day of the year and you're trying to find out ways you can shut off electricity that won't bother anyone, Bitcoin miners can basically sign up to say, okay, roughly 5% of the time will be shut off when you have a problem in exchange for having the lowest rate the rest of the time, which is kind of the exact opposite of what you'd want to design for if you were like a hospital, where basically you're saying we'll pay whatever we need to, but we're like the last that would ever be shut off, right? And so Bitcoin miners on the total other end of the spectrum, and that can actually be useful for grid stability, especially because we don't have the technology yet to cost effectively build grid level large scale electricity storage, right? We can do it for obviously areas, but it's not something we can just have everywhere abundantly. And so another way to do it is to have more flexible demand sources. The way I would phrase it is kind of like how Bitcoin can help with variable sources of power. It can also help with always on sources of power. And so when we look at how a grid works, there's some sources that they're kind of fluctuating based on the weather, right? So sun and wind. Then you have like coal plants or natural gas plants that we have fine control over. We can turn them on, we can turn them off. It's a shame to have, it's kind of like a lot of times they're built only to be used, kind of a small percentage of the time, which is somewhat wasteful, but it's important so we don't have blackouts and brownouts. And then the third type is, sources of power that are almost always on. And so those would include like, hydroelectric dams, as long as you don't have like a severe drought, basically it's always on. And same with nuclear. Basically, it's once you're started, it's almost always providing power. And the challenge there is that if you have always on supply that doesn't change much, and you have fluctuating demand, you have a challenge. You either need to not build too much of that fixed supply, and you have to have some of those, like say natural gas plants, to provide that marginal extra supply when you need it, or you need to overbuild, and then you're just wasting some of the energy you're producing, which is both harms the economics of the project and it's wasteful. And so one thing that Bitcoin miners can do is they can co-locate with always on sources of power and soak up the power when it's not being used. Basically the kind of the fluctuating, if you have like fixed supply that's overbuilt and you have fluctuating demand, they can kind of eat that difference. And of course, if you have those rare days where demand goes all the way up to supply, those can completely shut off. And so it's another way of stabilizing and economically incentivizing a project. I think if anything, a funny thing is that Bitcoin mining is not big enough. It doesn't use enough energy to solve all these issues. That's why I don't really get concerned about Bitcoin's energy usage, because the more this network is around and understood, the more it will be increasingly co-located and basically merged with the energy system, so that it's for the most part only it's using the types of energy that make sense. Talk to some of the Bitcoin bulls, they'll say there's like no chance that Ethereum can ever be larger than Bitcoin, whereas I view it as a non-zero chance that at least for a period of time, Ethereum becomes a larger system. It's not my base case, but it's something that I would not rule out. But then the question becomes, just because it's larger, that doesn't mean that it's solving the same problems that Bitcoin does, right? So the proof of stake element kind of, it requires more governance in the system to run than a proof of work system. And the risk there is that, basically with blockchain, there's a lot of design trade-offs, right? If you want to have it process more transactions or process transactions quicker, or if you want to have smart contracts on the base layer, all these things basically make it harder to run a node. And therefore the network ends up becoming more centralized. And there's other aspects too, like, basically because Ethereum has, smart contracts and decentralized exchanges and leverage and things like that, there's this kind of juicy market for front running trades. So, in Bitcoin, mining is pretty simple. You just kind of pick the high fee transactions and stick them into the next block. Whereas in Ethereum, there's actually ways where you can almost be like, you're like a market maker that can go and front run the people that are trying to get in the queue, and you can therefore get more revenue from that. And that's
Yeah.
a pretty centralizing force, because the entities that are sophisticated enough to construct those blocks are not that many, right? And so it's actually it's pretty hard to be involved there. We also see that most because proof of stake, you need 32 ETH to be a validator. So a lot of people, what they'll do is they'll deposit their Ethereum on Coinbase or
Uh-huh.
Kraken, or they'll use liquid staking like Lido. And so a small number of entities end up controlling most of the staked coins, which means that if they wanted to say if they wanted to block Tornado Cash at the entire network level, there's only a handful of entities they'd have to go after to do that on a proof of stake system, whereas it's harder to do on a proof of work system. So I think the risk there is that, in one way of looking at it, the current fiat system is essentially a proof of stake system.
Mhm.
And so, a proof of stake system that's in blockchain form can get pretty large, but then it risks getting captured and centralized and censored, and it kind of
Yeah.
defeats the purpose of why Satoshi kind of invented this whole thing in the first place, which is to at least try to create a system that can be free of being blocked in any way, which again is scary to people in some ways, because you think, well, that means criminals and terrorists can use it, right? But of course, the group of people in the world that want to use a system like that for good purposes and that need a system like that far outweighs the number of people that want to use it for nefarious purposes. It's kind of like the internet, right? So when people created the internet, it's like, well, this can enable bad things on the internet. Well, yeah, it does, but 99% of it is good, or at least a lot of it is good, and the minority is people using it for bad purpose. And I think the same is kind of true for the idea of uncensorable transactions.